Hello friends, I'm back with another video on how to trade intraday, reading price action chart by chart. I'm not going to be using any indicators like RSI or MACD, just using an ATR for the volatility and I'm not going to cherry pick this, so I've got a watch list here. I'll just pick out anything and I'll give my commentary here, and I hope that you can learn something from it for whatever it's worth. So first off, I'm going to do something like, let's have session breaks. I'm going to be talking about the 10th of April, which was yesterday. Now, assuming that I've been here in the market and I was looking at this stock, just picked up GMR Infra, I'll go through a couple of stocks. So basically, our trading session started here, right? Now, our trading session is here, and we are at the start of the session. So there's going to be implied volatility there, because all the aftermarket orders and the pre-market orders are going in. People are clashing. We don't know whether the market is going up or down. And let's basically start off by looking at the Nifty chart for that day. So if you see here, just give you an idea, Nifty has opened. Basically gap up from here. You see a 1525 candle to 22,642. It has opened at 720. It's opened gap up, but the prices have closed below. So that's why it's showing as a red candle, and it's gone up for a bit, then come here, then gone up, come here. So it's kind of been range bound for at least up till this point, where there was a breakout, say around 1325 or something. It has been range bound, sort of going down, going up, all over the place. So it was quite range bound here. Now let's go to our chart. We were on which chart were we looking at? GMR Infra, I believe. So now that we've looked at Nifty, now you see here, you've got a gap, you've got a candle open here, and so we'll wait for the first 10-15 minutes to give us some idea. And we are on the 5-minute candle here. Okay, so assuming that you were looking at this candle here, so we got a nice big candle around 1% here, and then immediately off the bat, you have sellers coming in. People who had gotten in this rally, basically, they wanted to book some profits, so the price came down, but there was buying pressure here. And while the price tried to break through the moving averages, there was support from it, and then slowly but steadily, if you see here, let me zoom in so that you guys get a better idea. Can you see this doji candle? Lot of fighting between the bulls and the bears. So assuming that you're seeing this candle here, so there's a fight here, and what are you going to do here? So if I were you, I would not take any trade here, because you have this candle close below the 200-day, 200 period moving average, and it's not a good place to take a trade here. Though the price has gone up, what I could have done is I could have told you take a trade over the high and then you make a nice profit, but I don't want to be lying. So you are here at this point of time. The right side of the candle hasn't happened so far, right? So I wouldn't take a buy trade here, and neither would I take a sell. You can't take a sell on a bullish candle. You can take a buy on a bullish doji, though it is a 5 paisa up. It opened at 35 and closed at 35, but you're seeing a 5 paisa here, right? So I wouldn't basically trade here, because you've got a 200-day moving average up ahead, which will act as dynamic resistance. Now you have this good candle here. It's finally broken up above the 200 period moving average. You could take a trade here above the high of this candle, and your stop loss will be below the low of this candle, or below some points below the 200 EMA, and you can definitely go above 85.45. You're still in the trade. Closed at 85.70. Now you've got a doji. That's a clear sign. You haven't sold yet, but after seeing this, I think you must, when the next candle starts, it did go up, but the sellers got it down. You should have sold here, because We don't know this is going to be a red candle, it can be a green candle, but this isn't offering well, right? So this could be something like an evening star, which it is. But this you only come to know at the end of this candle. But with the doji here, you've already lost momentum. So if I were you, after this candle ended, if I hadn't sold here, I would have sold here. And now the bulls tried to push the price up. It went up, and then there was selling pressure. And if you see here, they bought it. They basically brought it down, and you got the open here and it closed here because you have got the EMA. You've got the EMA supporting it. The 9 EM, the 9 EMA, and the VWAP is supporting it. And because of that support, you see another green candle. So people who shorted below the low of this candle or below the close of this candle, their SLs would have been hit unless they kept such a big SL or an SL here. Uh, then they would be safe. Otherwise, their SLs would have gotten hit. And the bulls tried to push it up here. Now again, people who went long above the high of this candle would have had the stop losses hit because you see the bears crushed it down here. And you see here, the spike has taken out the low of this candle. So there, it has taken out all the buyers who went long here. And then you have a you 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 close here at 85.40 and then you directly open at 85.30, 10 paisa below. And you had sellers try to pull the price down, but buyers fought back. And finally, the price opened here at 85, closed at 85.45. 85.45 is above, is slightly two pips above the EMA line, and it is almost one pip above the VWAP. So you could have taken a long here. Uh, that depends basically. You can do something like what you need to do here is and trend line here as well. Now you are at you see this candle here. We don't know these candles, right? You are here at this point of time. You see this red candle, and the price appears to be going down. So what are you going to do? And you are in the middle of all these EMAs and VWAPs. I wouldn't take any trade because if you see here, prices close at 85.40, and here uh, uh, the bulls have tried to basically pick it up. They went up a bit, but again stopped by the dynamic resistance provided by the VWAP and the EMA9, and again you have sellers here. So if you are selling here now, can you take a sell here below this candle? You could take a risk because you had buyers basically trying to go up twice here. You have this low and you have one bull try, second bull try, and then you have sellers here. So you could have taken a short here below the close of this candle, and you would have made some money. And then you see, and if you're still in the trade, you see that you've got a nice scalp here, and then you see something like a hammer candle at the bottom. So that basically means that buyers are fighting back, sellers have not been able to push the price down. So there is likely going to be a change in trend, or there's going to be some sideways movement. So you have another fight here going on, nothing happening here. If you see here, nothing happening here, buyers trying, not succeeding. Then immediately the bullish candle has broken the trend line, and a break of the trend line basically will be to a test of a new extreme. Sellers are immediately coming in. So if you went buy above this, you would have triggered your stop loss. Then again you have a doji. There's a terrible fight going on here, and the price is below all the moving averages. So if you took a buy here, your stop losses would have been hit badly. You would have been out, and that would be your second or third trade, basically, where you would have incurred a loss in intraday, and you would be in a very foul mood, and Either you would be doing revenge trading and then incurring further losses, or you would have probably smashed a few things here and there, or jumped up and down, pulling your hair out, and then either you closed your laptop, went for a cool walk or a swim, or you decided to revenge trade. I don't know what you did, but so I hope you didn't go long here and then you have a sell here. And now uh, prices again come back just inside the trend line, but since the trend line is broken, you can expect a new extreme here. So you have this sideways action all above below the EMAs, and the only trade that you could take here is something that would be basically a short trade here, and a short trade close to the EMAs would be good rather than taking it somewhere in the middle, because then where would you place your stop loss? And finally, price reaches a new extreme here, and after reaching a new extreme here, the bulls have finally started to make an entry. And if you see here that there is the volume is kind of below the uh, below the 20 volume 20 period volume. So although you got in 0.18% move, 15% move, it's still sparse. Here again, so this is kind of a a volume divergence here, followed by a volume divergence here as well, because the volume is high, but the price movement is just 5 paisa. Can you see the fight? Can you see this long wick, this buying pressure, and can you see the small wick where the EMA 9 is not allowing the price to go up? So again, you have sellers trying to push through, buyers have hit back. So you should take trades here because that's in the middle of no man's land, and the price has slowly started to go up. So, but again, there's a moving average. So if you took a buy above this, you would have made some money, but I wouldn't recommend it. That's just basically gambling. If you're gambling, you're going to blow up your trading account multiple times, and then you start seeing that the market is for gamblers and nobody makes money, and there is SL hunting and all that. And while some of it may be true, you need to understand price action, and anybody can make mistakes. So don't be too harsh on yourself. Basically, just try to learn from each trade, whether it's a profitable trade or a bad trade, doesn't matter. So after price push through here, not able to go up, and you see here that the volumes are sparse, and then again gone into consolidation, and then again you have this huge big candle, and the volume is just slightly above the 20 day volume. So you've got 78K instead of the 68K, but the relief is short lived. If you took a buy above here, your stop loss would have been hit, because although this is a breakout above the VWAP in the 20 EMA, the 200 period EMA and the VWAP, it's a false breakout. And there you go, sellers are hitting back in style. Again, buyers try to do something. I will zoom here. Can you see here? You have a nice gravestone. So what does this mean? This is not your hammer. This is the opposite of the hammer, which is a gravestone. And rather than banging your heads on trying to name the candle when you have precious time in the market, this is selling pressure, and they have really basically put the buyers in the grave, if you will. So, but buyer said, "What the hell? We are going to fight back." And can you see here the volume? 6,000 compared to 61K. Now that is really pathetic. But you have 10 paisa movement, 0.12%. That doesn't mean, again there's a volume price divergence. So, and if you see here, this is what happens. You've got you've got three black rows sort of one after another. You have price coming down, price broken down along the moving averages. And if you are taking a short here expecting the price below the moving averages, wouldn't have been entirely wrong, because now price is shown that there is increasing momentum here. Can you see momentum has increased and price is below the moving? So you could have taken a short here and your SL would have been hit. But that's okay. There's no holy grail, right? So at least you are taking it in a proper area where the prior trend is down, and that's fine. So price, it would have hit your SL, but that's fine. This is a proper trade with proper trade management rules, and your SL get hit. So what the hell? there's always another trade, right? Because there's no 100% accuracy in price action. Everything, it's only probability game. So if you are even 50% profitable with 1 is to 2 RR, you're good to go now. And if you are 1 is to 3, then you're good with even 30 or 40% accuracy. So 1 is to 4, even 20% would do you fine. And don't get into the exact mathematical of 1 is to 2, 1 is to 4. The point I'm trying to make here, friends, is that as long as your accuracy is good or your risk reward multiple is good, your R multiple is good, you should be good to go as long as you're net profitable, right? And then you can slowly improve over a period of time. Now, you took a trade here, your SL gets it. Okay, no worries. Now, you see this candle, nice robust candle. The volume is below the 20 period volume. And if some traders didn't understand this, they would have gone above the close or above the high, and their SL would not get hit here if they kept the stop loss below this. Their SL would not get hit here if they took a trade here. They would have been scared for a bit, but their SL would not have been hit here because we got a low of 85.05, and this is also 85.05, the spike. But if you kept it below the low, you would be still in the trade and you could have made some money. Now, people who kept it at the open of at the open of at 80.505, their SL would definitely be. So if you kept somewhere here, you would have still been in the trade provided you had the patience. Maybe you got scared here, and then as soon as you got some movement here, movement above your entry price, if you took it at the close here, you would have sold. Or if you had the courage and you just waited and said, I'm not going to do anything, either I'm right or I'm wrong, then you could have sold somewhere here, somewhere here, somewhere here. Okay, so this is how you look at price action, bar by bar, looking at the EMAs, looking at what the candles are doing, what the volume is doing, how things are, and you decide. And remember, whenever I'm talking about a candle, it's only the current candle or the candles to my left. The right candles haven't happened, right? So we are here, and I hope you got good learning for today. If you really like my video, please subscribe to my channel if you haven't done so already. Please hit the bell icon for notifications so that whenever I release a new video, you are notified. Forward this video and spread the news about my channel to people who want to learn about intraday trading and swing trading. I try to provide my earnest inputs for your benefit, and I'll see you in the next video. Thank you for watching. Bye.